Creamer Media's Mining Weekly Online is talking to Cobus Lutz, the CEO of Pan-African Resources. Cobus, although we've got serious currency headwinds in terms of the rand-dollar price at the moment, one of the fortunate things about Pan-African is its Elikhulu project, which is coming in and will start producing in August at low cost.
It's not only Elikhulu, but it's also the rest of our surface tailings. So on an annualized basis, once Elikhulu is up and running, we expect to produce almost 100,000 ounces per annum of gold via these tailings operations at an all-in cost of below $700 per ounce, which is exceptional.
And what are the chances of you folding or bringing your existing operations into Elikhulu now and having a single output from one place?
Well, Martin, there's certainly potential to combine the ETRP, which currently produces in the order of about 20,000 ounces per year, with Elikhulu. In doing so, you'll bring down the unit cost for ETRP to a similar number than what you have for Elikhulu. So I think that's quite attractive. And we've also detailed plans for Barberton in terms of the regrind mill we're currently installing. So that'll take the BTRP at Barberton back to previous levels, production of around 20,000 ounces per year.
Having said that, you've still got the underground operations, which at this rand price that you're getting for gold, these have to be watched. You have to be very vigilant as how you're going to deal with the weakness of the rand price of gold and the impact on your underground. I'm sure you will be very vigilant.
We are. I mean, we always were vigilant, but in this rand gold price environment, it requires massive attention and massive focus, and that's what we're doing. So to our shareholders, we are saying that the current operations is enjoying all of our focus and attention at this point, and we'll make sure we run them as best as we possibly can.
There are winds of political change coming through, and you mentioned that your resources don't get credited in your share price. Do you think if South Africa really gets back in with a better political outlook, that maybe you'll get the benefit of your resources being valued and showing up in your share price?
Well, we hope so. I mean, but in order for you to get any value, you need to demonstrate that you can turn those resources into cash flows, which is why projects like Royal Sheba at Barberton and the Goli project at Evander is quite attractive from a return perspective and from a timing to cash flow perspective. I mean, very attractive, and these projects we believe are worth progressing. So that is for us how we get value from ounces. Similar to Elikhulu, we had a resource of more than 1 million ounces on our balance sheet, or rather our resource and reserve statement with no credit. And now with Elikhulu close to production, we're seeing that value come through in the price. Initial capital estimate of 1.74 billion for Elikhulu, or roughly $125 million. We are forecasting a payback of 4 years post-commissioning on that project. In terms of the profile of our surface tailings operations, massive ramp up with the commissioning of Elikhulu, a steady state 6 months period with Elikhulu running, and BTRP performing at 20,000 ounces, which it will do going forward. That's just under 50,000 ounces for a half, or 100,000 ounces for a year. Again, at a very attractive cost, below $700 an ounce. Globally, the average all-in sustaining cost in 2016 for primary gold mines covered by S&P Global Market Intelligence remained relatively flat from 2015, and that number was quoted as $879 an ounce.
What is coming up immediately that's going to take up the bulk of your attention?
Making sure that Elikhulu is commissioned on time, on budget, or hopefully below budget and ahead of schedule, and ensuring that we continue to focus on the underground in what is, as you say, a difficult rand gold price environment.
That was Creamer Media's Mining Weekly Online talking to Cobus Lutz, the CEO of Pan-African Resources.